So you're interested in using the equity in your primary residence to buy a second home, and you're not sure what to do, well, you're in the right place. Hi, my name's Scott Hastings. I'm a loan officer based in Charlotte, North Carolina, and I have a lot of clients, like everybody in America who bought a home within the last few years, that have a ton of equity in their house. Here in the Charlotte area, in the last year, home prices have gone up over 20%, and it's really that case for most of the country. So one reason that we talk about this, and something that a lot of people don't really realize, is that wealth in America is really created through home ownership. Many times I have clients who bought a house with me, maybe it was their first home a few years ago, maybe 5, 6, 7 years ago. And that house has doubled in value. So now they've gained $100,000, $200,000 in equity. The thing that they can do, and many people want to do, is buy a second home. Let's just say it's a vacation property at the beach. Well, sometimes people think, and I get a lot of calls where people first inquire about a cash out refinance because maybe they think that's the only way that they can get the money out of the house. Well, that is, especially in the current rate environment, this is being filmed in July of 2022, that's not the best option. Your best option will be to go to a bank or a credit union and get a home equity line of credit. So I know of a credit union that I've used personally, and many of my clients have used, that'll actually go up to 100% of the value of the house. So what that means is, let's say you have a $800,000 house and you have a $600,000 mortgage on it. As long as you meet the credit requirements and the debt to income ratio requirements, they'll give you a line of credit of $200,000. So now you've been able to tap into the full equity of the home. And really most banks, or a lot of banks, I should say, if you've got the right credit score, maybe a 720 or a 740, you can go up to 90% of the value of their house. So what you'd want to do is get this home equity line. You're only charged for the amount that you borrow against. And typically the minimum payment is based on an interest-only payment. Now, you definitely want to make more than an interest-only payment or you'll never pay the balance down. But that is what you'd want to do. So now when you go to get the second home, you have the down payment. You're probably going to want to put 20% down to get the second home. You can buy one with as little as 10% down, but you'll have mortgage insurance and the interest rate might be a little bit worse. But in general, that's what you want to do. So as long as your income can qualify you to carry the mortgage you have on your primary residence, plus at least the interest-only payment on the amount you draw off of the equity line that you got for the down payment on the second home, and then the mortgage payment on the second home, then you're in good shape. Now you've got two houses that are appreciating and you're continuing to gain wealth in America. So hopefully that was helpful. If you enjoyed the video, you'd like to be notified when another one comes out, please click the subscribe and the bell button so you'll be notified. Thanks again, Scott Hastings.